Good afternoon to everybody. Thank you for inviting me, Katie and Taylor, for arranging that I speak today. I appreciate that, and I appreciate your time. And today I'm talking about crop insurance for San Diego County growers. I've been writing crop insurance for about 20 plus years in California, based in Clovis, California, but I travel. And so I've had a home office for a number of years. So this whole COVID thing hasn't really posed much of a challenge for me. It just makes me more isolated and keeps me from traveling. So even though this isn't as much fun as going to a trade show, I appreciate your time and hopefully can get some information across to you and maybe see you in person next year. So, what is crop insurance? I'm going to focus mostly on the USDA's program. They subsidize, develop, and set the rates for crop insurance programs throughout the nation. Um, the USDA's crop insurance program is kind of a partnership between private industry and the USDA. And so the USDA contracts with approved insurance providers, and then I contract with approved insurance providers as the point of delivery. Growers or agents can represent more than one company, and I have two companies that I represent currently. And we are all equal opportunity providers, no discrimination, including farm size. I write farms all the way down to 2 or 3 tenths of an acre, up to several thousand acres. So something that's not listed here, but I write everything. This is a little bit of statistical information about crop insurance in California. There's not a lot of individual county information available that I can find, but here is something that shows that crop insurance, and I think this was effective or 2018's statistics through cropinsuranceinamerika.com. Crop insurance covers about 8.8 million acres and provides 8.6 billion in protection in California. Farmers are paid about $171 million for their insurance, or they paid $171 million for their coverage. And insurers or companies paid about $327.5 million to cover losses. In addition to that, the fine print down below shows there are private crop insurance programs available, and those are available through the companies. There's a variety of programs available through each company. They set their own programs and rates, and those paid out about $35 million in this particular year. And that kind of restates that. But one of the examples of private coverage is on grain. A lot of growers that grow grain insure for additional fire coverage under a private policy. So I was looking at the statistics for San Diego agriculture, and it seems like the farmland acres seems to reduce every year, and it's kind of typical, giving up some of its numbers to development. I just had a little notice here. It was said, can you hear me? It said my internet was unstable. So are you able to hear me? Okay, good. Yes. All right. And I know the avocado number in particular is reducing, and that's being replaced by some all types of different specialty crops. But the number I'm most interested in is the family farms statistic in the middle. It shows 96% of the farms in San Diego County are family farms. And so to me, that tells me there's a whole family unit there that could be reliant upon farm income. A more particular interest or urgency to get insurance covering as many family farms as possible. I'd like to keep family farms in business. Here's a few more statistics. This is 2017 ag sales in thousands of dollars. So ag is still big in San Diego County. That's $831 million. So crop insurance can help agriculture stay strong. There's risk in all businesses, of course, but farmers have additional set of challenges. They have market challenges, weather variables, seed and plant supplies, tariffs, reduced labor force. There's also USDA or government meddling in how farmers run their farms. And so I feel like with all those risks, if you can manage part of them, it would behoove you to try to do that under the crop insurance program. It helps growers protect against risks of crop and in some cases revenue losses. And the causes of loss are most natural causes: wildlife, fire, drought, any other kind of weather, insects and disease that you can't control. And in some cases, crop insurance can help growers to protect against losses due to market conditions. And that's under some of the policies that cover revenue. Uh, for example, a market glut due to inconsistent growing conditions related to weather, or a missed market due to poor weather. No coverage is provided against any losses due to bad farming practices or damage that is caused by a person due to neglect, malfeasance, vandalism, theft, or if you farm behind a dam and water backs up onto your farmed land, you're not covered for that. So crop insurance helps you project a minimum amount of income based on the production guarantee or revenue guarantees. And these are actually numbers you can take to the bank. They're accurate projections, and those are what you need when you're preparing operating costs, and they help you with your plans for the future. It provides additional security when you're going to the bank, and lenders love crop insurance policies offered as collateral. And they, of course, can get an assignment that will allow your pay them in the event of a loss. When crop losses hit, crop insurance helps keep farm families in the business of farming, and that helps stabilize the local economy beyond the farm gate. USDA is making the cost of crop insurance affordable. So when you ask what it costs, it varies all over the place because rates are individual by farmer and farm. But on the average, the USDA pays 62% of the premium cost because of subsidies. So there's also an administrative fee. Premiums are individually determined by grower, as I stated, and it kind of depends on what crop, county, coverage level, what your average yield is, what your tree counts are if you're insuring trees, and what the age of the trees are. Subsidies, as mentioned, they reduce the premiums, and then there is a $30 administrative fee for the higher levels of coverage and a $655 administrative fee for catastrophic coverage. Veterans and beginning farmers and ranchers, they get additional premium subsidies, and they can get a fee waiver. Limited resource growers are growers that meet the definition of poverty income levels, and they can have their administrative fees waived also. Please don't hesitate to ask questions as we go along. So as stated, they're individually determined. Premiums are individually. So an agent can give you a quote if you give them a few data points of information, the crop that you're growing, acres, what your average yields are, that type of thing. Agent will know what questions to ask in order to run a quote. You can go run the quote yourself if you'd like to go to the USDA website, and that's the web address down there, rma.usda.gov. It's a little tricky, but if you kind of click your way through it, you might be able to come up with a quote and then check it out with an agent later. So the amount of coverage available, this is the catastrophic coverage level I was mentioning had that high admin fee, but it's a 50% deductible with a 55% price factor. So it's the little pie, that's the little orange section, that's 27.5% coverage. It's not available on some types of policies, and it only costs that $655 admin fee, and there's no additional premium. So it's 100% premium subsidized, but you pay that $655 admin fee. Some larger growers with lower risk that have a lower perceived amount of risk participate in the catastrophic coverage level. And we do pay out claims at the CAT level. The amount of coverage available for buy-up coverage levels is up to 75 and 85% on some policies now. So 15 to 50% deductibles with no reduction in price. And so the orange sections increase quite a bit. The maximum buy-up levels vary by crop policies. Some have 85% as a maximum, some have 75%. And there's a $30 admin fee plus the premium that's subsidized. So the buy-up coverage levels, 15 to 50% deductible with no reduction in price. Buy-up levels vary. That's a repeat. They vary by crop policy provision. Sorry about that. It's funny how you work on these and then you don't notice you have a duplicate information until you're presenting. The amount of coverage available they guarantee on most policies, like I said, 75 or 80%, 85%, and that would be of approved yields. For instance, on the crops in San Diego County under that would be like citrus, avocados, grapes, or 75 to 85% of the dollar value of citrus trees, or 75% of nursery inventory insurance values, or it guarantees you up to 85% of your approved gross revenue under a revenue policy that we offer. And for the types of coverage, the first one that's the most common and that's been the standing in the crop insurance history is the production guarantee policy. And it's based upon your approved yield, and that's derived from your yield history and could include a combination of your yield history and transitional or assigned USDA provided yields. So this is an example of an approved yield worksheet that we would use to start up a grower who has 3 years of actual and 1 year we plugged in of the transitional, and this would be just, in this case, it's pounds. And in grapes, it would be tons. Avocados, it would be pounds. And so it just depends on what your approved or your actual history is and how many numbers, how many years of actual that you have, how high that transitional yield is that we plug in. But we come up with a 4-year simple average, in this case, of 6,255 pounds. And those are the crops off to the left that we insure under this type of program in San Diego County. Small grains is wheat, barley, and oats. And I don't think there's a lot grown in San Diego County anymore.
Or dragon fruit, isn't that kind of a different grow now?
Okay, dragon fruit would come under the whole farm policy because there's not a named policy. So I'm talking, when I talk about the names of the crops that we insure, it's the ones where we have approved named policies, but that doesn't mean if there isn't a named policy that you can't insure it. But there's no named policy for dragon fruit in the nation anywhere. So we would pull that under the whole farm revenue policy, which is a catch-all for crops that don't have approved policies.
Okay.
Yeah, and we would probably ask for your yield history in order to establish coverage on that.
If it never yield though, it's on its 3rd year. I guess they yield after the 3rd year, then you'd have to estimate, huh? Or wait till after the year that they first produce to find out how much.
Well, okay, under that whole farm revenue protection policy, we use 5 years of history. So if it hasn't produced yet, it's hard to get it insured. If you have other crops though that you farm, you can bring it in when it becomes, when it starts bearing. But if that's your focus, you're probably going to have to wait for a while to get some history before you can insure.
Okay.
So here is how the guarantee for the farm is determined. We take that approved yield from the previous slide and assume that the grower is insuring at the top coverage level of 75%. So we have a guarantee per acre, and then we multiply that times the acres in the farm, and that gives you the total guarantee for the farm. And what we do is we compare that to the guarantee of the farm. We compare that to the harvest for that particular year. So the guarantee for the farm in this example was 31,275 pounds. The grower, after he completed harvested 20,000 pounds, and so that's a deficit of 1175 pounds. And then there's a price selection that the USDA provides per crop. And in this case, in this example, I'm using $1.80. We always multiply the insured share, meaning if you crop share with anybody, this is where that factor falls into play. For the most part, growers have 100% share in their crop. And then multiplying those numbers together, we come up with a unit payment of $20,295. So I'm not going to go through a loss example on every type of coverage, but I wanted to run through the most simple kind. And so when we talk about guarantees, there's usually a guarantee of some sort on the farm, no matter what the program is. And we compare that to what the end result was for the year, generally speaking. So there's a tree-based dollar amount of coverage for citrus trees, and it covers citrus trees from planting until they're 4 years old. And it's established based on their tree age count and the price selection for the age. And here's an example of citrus trees. And this price selection is not a citrus tree price selection, but it's an example I used and didn't have to recreate. But it shows a 500 tree count and a price selection of $40 with a value of insured trees at $20,150. And a grower's top coverage level, 75% is applied, giving him a $15,113 dollar guarantee versus a pound guarantee. There's nursery commodity insurance. It's available to nursery wholesale growers only, and it's also a dollar policy. It's based on a grower's nursery plant inventory value, and it's an insurance value that's established using the USDA's Datascape software for pricing, and there's actual inventory and price lists to be entered into that software and to come up with an insurance value for the whole nursery. Here's an example of how we establish coverage. If there's 100,000 plant inventory value based on that software and the grower's price list and the grower's inventory, and the grower chooses 65% coverage level, he would have $65,000 worth of coverage. And here's an example of the dollar coverage claim. In the event of a loss, determinations are made like this. We establish the value of the crop before the event happened, and then we establish the value of the crop after it happened. So we're comparing two numbers and coming up with a field or a value of the loss. And in this case, it's $50,000. With the $65,000 coverage, the deductible is $35,000, and so the indemnity is $15,000. These are all oversimplified, just so you know that there's a lot goes in to nursery claims, and they can be repetitive during the year. You can have more than one claim because more than one event can happen after restocking. So we have several livestock programs in. Are there a lot of livestock growers in San Diego County? Or it's kind of dwindling. From what I understand, even the dairy farms are down to 1 or 2, I think. So there's a livestock price risk protection. And so what it does is it basically allows you to lock in a future price based on today's market. And you can choose the period of how long you want the insurance to go for when it starts to make the comparison between the market value and the price that you locked in. So that's just kind of a way to ensure your price. I don't have anybody that participates in this yet. I know some agencies do have more growers that participate in that, but it is price coverage and it doesn't cover your cattle against loss. Another type is called the livestock gross margin. So it compares an expected gross margin with an actual gross margin, and it's using futures again. Dairy revenue protection. It basically covers the future prices for milk and dairy commodities. And then this is pasture, rangeland, and forage program. It's called the Rainfall Index, and it actually covers a couple things. It covers pasture or grazed land, and a lot of cattle producers who have foothill operations or dryland grain participate in this because it is geared towards expected rainfall versus actual rainfall experience. It's not based on the amount of loss that the grower might receive, but basically the turnout of the rain at the local weather station nearby his operation. So it's a different kind of program, but it allows growers to cover their loss of forage if they have experienced a drought. And quite a few people do participate in this. And this is the whole farm revenue protection program that I was discussing. It's available on most crops, so it covers a lot of crops that are a little bit different. It's based on a 5-year average of data from tax returns and Schedule F. Basically covers all your crops under one approved revenue. It's quite a bit of paperwork to set up because of that initial year requiring a 5-year set of tax returns and also price substantiation and documentation. But I do have growers that want to participate in it. They want to jump through the hoops and get the coverage in place because it will cover stuff like dragon fruit and cacao. Diversified percent of their average approved revenue insured, and that's a pretty good amount of coverage. As I said, it covers all the crops in the operation that produce an income, and it covers crops that don't have those named policies as well as crops that do. So if you have a crop, say a citrus crop, plus you have dragon fruit, everything would be covered under that one umbrella policy. And you would get, if you had the citrus insured under the regular USDA crop insurance, you would get a premium credit on your whole farm policy. So you're not paying double premiums on crops that you have insured under both programs. There's some requirements in order to qualify for to qualify for the premium subsidies, and it's called the Highly Erodible Land Conservation and Wetland Conservation Compliance. This is administered through the Farm Service Agency. They track who's in compliance and who isn't. So this is another place that gets your information when you sign up for crop insurance and want to get crop insurance subsidies. It actually is part of the USDA's 2014 Farm Bill. Every grower has to certify that they are either farming highly erodible land and wetlands, or they are not. Or if you aren't participating in any other USDA program other than crop insurance, jump to this one. And there's a simplified version of certifying it. It just requires checking one box, and you state, I'm a perennial grower and I'm only participating in crop insurance. And so that's why I'm certifying that I'm not growing I'm not growing on highly erodible or wetlands. And it's like a shortcut to certification. Most growers do that especially if they're growing a perennial crop or a tree crop. And every grower needs to be in compliance to get crop insurance subsidies. And if you choose not to go that route, and I've had growers not certify with the Farm Service Agency of the USDA, but their premiums are about twice as much. So it's a process. Some growers just don't want to. Private, let's see, I'm trying to get this. Private non-USDA crop insurance programs vary by insurance provider or company. And examples in San Diego County include Citrus Freeze, and that's in addition to the citrus policy, which does cover for freeze. But the Citrus Freeze private policy may pay quicker with a lower loss trigger, and it only covers freeze, so it's a lower premium, and a lot of growers carry both. Grape cluster freeze on wine and table grapes, fire insurance, and hail insurance. This is a weather hedge. Basically, private company offers tailor-made weather insurance. This is a hurricane policy that they set up in the Gulf, and They rate it. They establish a grower can pick the amount of coverage or the amount of payout they want if the weather triggers are hit. And so it's kind of expensive. It's more like 10%. And most crop insurance premiums run around, and these rates here show 17% because it's Gulf. So these are even higher, but most crop insurance premiums, when you work out the math, it's about 1% or less on USDA subsidized premiums. And that's percentage of your coverage in a dollar amount. I hear from growers and why they don't want to sign up. They think some growers just say, I heard that costs a lot. It's too expensive. It's too much paperwork and I don't like this. And I've heard all those repetitively. To answer to too expensive, I would say that it's not a one size fits all type of program. It's tailored to fit your coverage and budget requirements. As we discussed, there are different options for keeping the premiums down. Some farmers who are smaller may only have a $30 fee plus a low premium if they're subsidized, and larger farmers can participate in the catastrophic policy and get some type of coverage if they really just don't like the premium rates. As far as too much paperwork, in some cases, they're right. That whole farm policy is extensively paperwork intensive to get set up. And once you get it set up, though, it's just a renewal every year with the add-on of one more year. So that's why you work with an experienced agent. They're trained to help you get the paperwork set up correctly. And there are quite a few in California. And I think that there's a few in Southern California that are trained to handle the paperwork. And as far as not liking the government in your business, sometimes I really just don't have much to say to that, but because the government does require that you report some information to. There is data sharing, of course, these days across different USDA programs. Most programs require significantly less disclosure on forms than a tax return does. And the exception to that is that whole farm policy where we're asking you for 5 years of tax returns. So that one gets a little crazy. Payoffs are great. You're managing your risk, you're weathering storms and crop losses, you're possibly expanding your operation because you're not taking 2 steps forward and 3 steps back with crop losses. It provides some economic stability to outside of your. It promotes your peace of mind, helps you sleep at night, and helps you keep growing. So crop insurance, in summary, crop insurance supports farms, helps little farms stay in business, helps big farms keep growing, helps farm families, communities and businesses, provides support for ag tourism and urban access to farm fresh products. So there's a lot of crop insurance options, as I discussed, and the USDA subsidies help keep insured growers keep their insurance costs down. And the growers can provide the crop insurance policy as collateral for operating loans and expansion, and the banks love that. Here's a summary of programs available in San Diego County. Small grains, citrus tree, grapes, nursery, livestock programs, apiculture. We didn't discuss that, but that's under the pasture rangeland forage and uses rainfall index data, and then the whole farm revenue protection. Does anybody have questions?
Looks like a good deal to me. Especially for citrus. It's easier for citrus.
The rates are pretty, I feel like the rates are pretty good. It just depends on your crop, of course. Mm-hmm. But I encourage everybody to at least get a quote and see what it costs before just writing it off. We try to pay out $1, or we being the USDA's goal for, and the farm, the farm crop insurance law, the farm bill requires that we pay out $1.05 for every dollar we take in. So we're constantly adjusting rates to make sure we meet that. And so that we're not just profiting off of the crop insurance program. The crop insurance program has the subsidies in place so that the companies can deliver it in a widespread manner, and so that farmers aren't paying too much premium.
Nice.
Hey, Bonnie, I'm sorry. I know nothing about crop insurance, but I did send you a question via chat. Did you see that?
No, because I don't look, because I'm like, let me see if I can find it.
I'm really sort of lost. So my farm's a winery.
Okay.
That means that losing my crop would carry an added value cost.
No, actually, there is no added value covered in just about any of these programs. So your grapes could be covered, but you
But and
would
this is
not.
great. But the biggest cost to me is replacing the vineyard. If a fire comes through, I can go out and buy a couple tons of grapes this year. But the issue is going to be I need a couple $100,000 to replant the vineyard.
You can check into the fire insurance, crop insurance, because there is fire insurance available. I don't know if it covers vines, but with the fires that we are increasingly having in California, if the private companies don't offer it on vineyards currently, and I've never written it on a vineyard, but it's possible that it's listed under the crops that are insurable under fire insurance. So we could take a look at that, and I could let you know.
Dude, should I reach out to you, or do you have my contact information?
You can reach out to me. Here's my information. And so if you want to give me a call or an email, I could look that up and find out for you. And then I can also shop around to different companies that write fire insurance and see if they have vineyards or trees listed.
Cool. Thank you.
Because the grape insurance program only covers the crop on the vines while they're growing. Any other questions? Thank you for your time. I really appreciate it. If you think of a question later, you want to email me, you can. If you know of another agent that writes crop insurance, feel free to reach out to them. I'm not trying to act like I'm the only crop insurance agent in San Diego County, but I am one that has a great deal of experience. I've been in the industry since before it was privatized, and started my agency in the late 90s and have been solely writing crop insurance since then. So I kind of know what I'm doing. I don't know the answers to all the questions, but I have the resources available to me to find the answers.
All right.
See you at the next trade show.
Yeah, thank you.
Thank you.
Thank you so much for your time.
Thanks.
All right. Have a good day, everyone.
Thank you.
Thank you.